right, Stan.
All right.
So
Yep.
Stan, you're gonna go ahead and take it over. Stan does a lot of underwriting. Tom, Stan, and I are we created a multifamily team. So Stan's gonna start breaking down every Friday like he has been, showing you guys, how to underwrite, break down terminology, and then now organically that we have this team, you guys are gonna watch us start putting multifamily in our portfolio. Go ahead, Stan.
Cool. Sweet. Thanks, guys. Appreciate you guys coming in today. I might be a little bit rushing, but it's because I have some places to go after. But aside from that,
Happy anniversary, by the way.
Thank you, brother. Fourth year anniversary for my girl and I. So yeah, we got a dinner planned tonight, and thank you guys. Thank you. All right, so let's get started. Sorry for the wrong wait. I was just trying to figure out some new formulas for the calculator, but stay till the end because I got something for you guys. So I put it in the link if you guys want to follow in the chat room. There is a document that I attached. You guys can all hop in on there. You guys can make yourself a copy. This is basically just an underwriting deal analysis 101, just kind of for you guys to like follow along. So instead of me kind of just spitting out of my head, we just kind of formatted this so it's a lot easier to follow. So when underwriting a deal, you guys have basically a guideline to look for when finding, on multifamily properties. So I just want to give you guys a heads up. I am a commercial licensed agent here in Nevada. Everything you guys learn here is just pretty much for education purposes only. If you guys do catch me making a mistake, call me out on it, because I'm not perfect. So here we go. So just to follow along, when you guys are looking for a multifamily deal, there's a few things to keep in mind. Let me share one more item as I know there's probably some of you that are brand new in here. I'm going to share one last thing, which is basically a resource sheet that you guys, here we go, there it is. I'm going to put the link inside as well. Small little freebies for you guys. Here we go, 1 second, wait for this to copy link. All right. So we start off with that. Here's some few resources that you guys can look for guidance. These websites, Crexy, LoopNet, these are free websites that you guys can look for any commercial assets, between storage units, multifamily, industrial warehouses, shopping plazas. It's the best way to find some. We don't have a proper MLS listing as we would if we were a licensed agent. These are like the apps and tools that we basically use to get any multifamily deals. So if you go right here where it says for sale, it lists out all the different categories. All you simply do is just find the asset class that you're looking for, but because this is multifamily, we're going to do multifamily. Let's do Ohio since that's where Josh is from. So if you guys want to look for multifamily in Ohio, it's very simple. Here it is, right? You can do any filters, you can do cap rates, any market price, all that good stuff. Task A, B, C, and D. And you can choose from here right now based on the broad filter that we did. There's 147 listings currently active, but if we take off these certain filters, and then let's say we get a little bit more niched on it. What's the city, Josh, that's in Ohio that you look in?
Canton.
How you spell it? K-A-N-T-O-N?
C-A-N-T-O-N.
C-A-N-T-O-N. There we go. All right. So what's in Canton, Ohio? Let's see what's going on there. There's still 147. Oh, I guess there is.
You got Ohio selected too.
There we go. There's only one in your city that's on here. So, you can do that. You can go to LoopNet as well. LoopNet's another website. So if one's on Crexy, you can always double check to see, because they're not always listing the same, like brokers don't typically list on the same time, same websites. Sometimes they do one, sometimes they do another, or they do both. So we go Canton, Ohio, multifamily on LoopNet. Let's see how much pop up here. And there's two. There you go. Same property right here, but that one's on auction. The other one is right here. So these are two free resources that you guys can use for websites. Also, CoStar is one of the best websites when doing deal analysis and data for any type of commercial deals. But this is a very, very expensive subscription, but it gives you the best data amongst all platforms. So this is something that I look into once you're a little bit more established, if you guys want more accurate data. Otherwise, you can always partner up with a broker that's in your city that will help you find comps. Obviously keep in mind that not all brokers would do that, but that's why you have to create relationships in this industry. Okay. Let's see. And then CrimeGrade. CrimeGrade is a website that we use to basically help us find out what if the areas are, the crime rate behind that area. So let's say I'm going to give my address, zip code, just because that's the only thing I can remember right now. So I live in Henderson. Henderson's a pretty substantial area right here, but there's little pockets of it obviously that are not the best. This website is saying it's a D+. I would say in my area it's more of like a B+. There's certain parts of, like I said, Henderson that little pockets are not that amazing, but this is another website you can use. All right, and then this is another website that I found as of recent, which is pretty cool. And this kind of gives you a breakdown of the area. So if I put somewhere, let's use my old address. So if we look at this area, there's a census that tells you basically what the median family home income is in this area. That's typically what we use when we look for multifamily. Like what type of average income does that area generate, right? For multifamily, we typically look for $40,000 or more on the median income rate. And then, this is just data for you to use that you can always, have as reference. So that's another website. And then Rent-A-Meter. Rent-A-Meter is a good one if you want to look for the average rents in the area. It's a very popular website. There is a free Rent-A-Meter. There is a free search that you can use up to, I believe, 5 per, I don't know, if every few days, but it'll give you an average median for rent per address. You can also use apartments.com. I'm going to add that. Apartments.com is also a good one. And I believe there's one more, which is forrent.com. That's what it is, forrent.com. So those are 2 other websites you could use to help you find out what the average median rent income is in that area. Cool. So hopefully you guys make a copy of that, use that as some resources. I'll keep adding onto these sheets as we progress. But if we move into here, the deal analysis. So when finding a deal, you want to identify potential investment opportunities, all right? And how do you do that? Well, you create relationships with brokers, licensed agents in your specific city that you are looking to target, right? So if you're going to look for, there's 2 different types of relationships. There's brokers, and then there's seller relationships. When you're talking with brokers, you want to be clear on what you're looking for, because a lot of these brokers, most of them are pretty experienced, and they don't want to waste time. If you got to be really specific on what you're looking for. They're very quick on the phones, and they can sniff you out. So especially if you're brand new, but don't let that, hesitate. Don't get hesitation just because you don't know what you're doing. You come into these Zooms with us, so you have a better understanding of how to approach brokers. I find that, talking to brokers are a lot more easier than talking to sellers, just because you got to remember a lot of brokers are just messengers, right? We're licensed to represent our clients. So it's just delegating information back and forth. You're not really negotiating much as you would negotiate with a seller. And basically, like I said, we just share messages back and forth when negotiating. So it's a lot more easier talking with a broker, in my opinion. So you want to be clear on what you're looking for. And what I mean by that is you want to create yourself a buy box. I'll give you an example of a buy box. It's basically like your market, right? For us on our multifamily team with Tom and Carlos, Arturo, and Brad, our target market is Texas. You want to look for your market, your submarket. Our submarket is Houston, but obviously we're open to other markets like Austin, San Antonio, Dallas, Fort Worth. So that would be your submarket. And then you also want to find out how many doors or units, right? We're looking for the 60 units and under. And then you also want to know what your classifications are for your class type, which is A, B, C, or D. We're looking for typically a class B or class C, right? That's a classification. And then you also want to know your price per door. So depending on price per door, every market has a different type of price. So we typically look for price per door of, let's say, 100,000 minimum. So if we're doing 10 doors at 100,000, that's $1 million on your price range to start. And then you also want to know basically what your cash and cash or cap rate targets are, right? Those are essential for what you're looking for when you're letting a broker know, like, hey, we want a 10% cash and cash with, minimum of 8% cap rate when looking for these properties. So that's how you create a buy box, and you can go a little bit more deeper to it. You want to tell them that we're looking for value adds or stabilized only. So those are two that is typical when you're talking about a buy box. Value add opportunities basically says, hey, I want a property that's a little bit distressed, low occupancy, and we want to take that and improve it by stabilizing the property. So those are a few metrics that you want to let your broker know what you're looking for when it comes to being specific on a buy box. All right. And then you want to prove that you can close, right? So brokers typically will ask you for some type of credibility. They'll ask you for proof of funds, some type of buyer profile. So, you want to prove that by, your credentials or some type of credibility packet. And if you don't have it, you have to find people that you're representing. If it's, if you're doing it on your own, or if you're partnering with investors, you want to create that somehow. Okay. And so remember, brokers only get paid when you perform. So that's why you don't want to waste our time doing all these things without having these things set in place, right? And you don't want to you show that you're not just here to kick tires. A lot of times, like I said, most brokers will sniff you out if they know that you're wasting their time. Be sure you're professional with them and let them know what you expect. It's not super hard to do to do that. It's really just creating that format for yourself. So the other one is also seller relationships, right? Seller relationships is direct to seller. You're basically going to be farming in a specific area. You're calling the owners directly, right? You can do that by any type of marketing, direct to seller marketing. You could do, door to door. You could do with wholesalers. There's a lot of different types of marketing that you could do to get sellers in front of you. This can be very successful, right? We typically like to, especially for multifamily in that $15 million range or less. That way you could target more of like the mom and pops. Those are, less competition versus something that's, 100 plus units that institutional buyers or brokerages and private equity groups go for, right? So this is kind of like that price range you want to target. It's a 15 million under if you want to be direct to seller. And you must know the area and be active in that market, right? If you can specialize in a specific market, obviously, and you get good at it, you can be that special, you can be that wholesaler that specializes in commercial wholesaling for multifamily. All right. So next thing you want to do is you want to collect is by collecting data from the broker or seller. And the three things you want to ask for when collecting data from the broker is you want the OM, which stands for the offering memorandum, if it's marketed. So if you're going on like the Crexy or the LoopNet, sometimes they put it up. It's basically like a flyer that shows the overview of the property, all the market analysis for that specific area, the comps in the area. It's basically giving you the rundown and the metrics pro forma for that specific subject property. And then next thing you want to get would be the rent rolls and the historical financials, which is what we consider as the T12, which is a trailing 12 months of financial statements. So these are the two most important ones, the rent roll and the historical financials. If you don't have these two, it's hard for us to underwrite any type of property, okay? You don't necessarily have to have the offering memorandum from a seller because most of the time they're mom and pops. If you're going to target the ones that are less than 15 million, they don't typically create an offering memorandum unless, you know, they might have a team or a property management company that does it for them. But these are the two most important pieces that you want to collect from a broker or a seller. It's the rent rolls and T12. And then commercial leases, those only pertain to a property building that has, let's say, a retail storefront. Sometimes, you know, there's multifamily buildings that have units up top, but then their bottom floors have some type of commercial space, like let's say a small coffee shop or a retail spot for a restaurant. Those are, you know, what's included for commercial leases. More often than not, if we're targeting more of the multifamily, it's just going to be multifamily, but we want to plug this in just in case. And then also you want to collect any other legal documents affecting the deal economics, meaning, you know, all your title reports, make sure that, you know, the property can, and this is actually after if there's any issues with the property that's legally holding the property from clearing title. So you want to get that. Another thing is you want to create or purchase dynamic acquisition model templates. Basically, if you don't have one and you stay till the end, I'll share with the group template for you guys. I know I've been saying that I'm going to create one for you guys, and I finally did. I found one that I can share. I think you guys are going to love it, and I'll show you guys after I'm done with this. So you want to create or purchase acquisition models. I've purchased a few, so that's what I'm going to be sharing with you guys. All right, so you don't want to recreate the wheel every single time. So you want to create this and then basically use it over and over to help you guys underwrite properties a lot more quicker, right? And when you're using that calculator, that template, you want to add data into the acquisition model. The most important things to add is the historical data of the property, in place data, which means your actual in place rents, what the actual rents are producing today versus the assumptions, which is what we consider the pro forma. Those are what our assumptions or future projections of what property rents could go for, right? And then you want to value the deal. What I mean by valuing the deal is you want to have target metrics in place. These are the return metrics that you're going to have in the calculator. That's very important to an investor or for yourself, right? There's three things to keep in mind. This is the IRR. IRR means the internal rate of return. That's what IRR stands for. It's a very important metric to have in the calculator because it measures an investor's time-weighted annualized return on an equity invested. Okay, some of you guys probably don't know what that is, but it's okay. As time goes on, you know, there's a lot of terminologies in commercial that you're going to need to learn. So for you to understand like what it means, and it'll help you do your underwriting a lot more better and a lot smoother, so you know what you're talking about. The next thing is what we call an EM, which is equity multiple. And that basically measures how many times over an investor earns their equity contribution in the deal back over the entire hold period of the property. So it means like if I invest 50,000 today, when I exit the property and I make 100,000, right? That's basically a 2 times multiple, because I'm earning my original 50,000 back plus another 50,000. So that would be a 2x multiple. That's just an example of what that means. Okay. There we go. Anybody have any questions? Let me know if I'm going too fast. All right, and the third thing is cash and cash. All right, so cash and cash represents the cash flow distributed to investors from operations on an annual basis as a percentage of the cash they invested into the project or the regular income they can expect from being an owner of the property. So typically, that's all the cash that the investor invested, basically, like, you know, the renovation costs, the closing costs, and the purchase price. You're going to take that and divide it, and you're going to get a cash and cash return based on, here, let me give you guys an idea. So this is like a cheat sheet I'm going to give you guys later today, but that's how you create a cash and cash, is by taking the total invested divided by the net cash flow, and you're going to get the cash and cash return on that. All right. So when you're doing underwriting, you want to underwrite as many deals as possible every week, right? Because it's a low hit rate. You want to, out of 100 deals you underwrite, you're going to make about 10 offers, and out of those 10 offers, you potentially close one property. I'll give you an example. I've underwritten probably close to over 100 deals just in the last few weeks. I finally closed on one about a week ago with one of my investors. We made a few offers and finally closed one. So, you know, that's a pretty good return rate. Don't expect that every deal is going to make sense that you're going to take down, because a lot of times these deals get killed because of, you know, a wholesale fee that's too fluffed, right? Or the deal just doesn't make sense because it doesn't produce enough cash flow. So don't get discouraged. Keep underwriting deals every single day to get better at it. All right. So another one is competitiveness of the offer. What it means is basically you want to make an offer to the broker or the seller, but before you make an offer, you obviously need to underwrite the deal based on what the metrics are giving you. Whisper pricing from the broker. Whisper price, you're going to hear that is basically saying like, hey, if we're going to advertise it, let's say at $5 million, and you can ask the broker, hey, what's the whisper price? Advertising is 5 million, but he could tell you the whisper price that the seller is willing to let this property go would be maybe more of a $4 million whisper price. So that's the terminology that, you know, you could use when talking with these brokers, or if you hear it, that's what it means, right? There's also a target price and a strike price from the seller. The target price and strike price is kind of similar. Well, the strike price is very similar to a whisper price. That basically means they're not going to go and present a deal with an offer that's lower than that expected strike price. So if the whisper price is 4 million and you want to offer 3.5, they're not going to present it because they want to present the offer above the strike price of 4 million. And that could be, you know, your target price. Your target price would have been 3.5, but their strike price is 4 million, right? That's a little far apart by 500,000. That's just what it means. All right, so after you write a competitive offer, right, now it's time to take a tour. If your offer gets accepted, right, you want to take a tour of the property, right? There is a time and financial commitment to touring a property, so you want to make the trip worthwhile, right? So if you're traveling to a different city, or a property is an hour away from you, or, across the states, you're going to have to plan for that, right? So you have to plan for flights, hotels, and food into your, your commitments. So you're going to have to include that into like your budget. So you want to make time for that. And then you're also going to need to understand the capital needs of the property, right? How much construction is it going to take? You're going to have to build relationships with general contractors, and you want to take them with you to give you a better idea of what that property is going to take to renovate, right? You're going to have to get information directly from the property manager. If they have any property managers, they're probably one of the best people to get data from, because sometimes owners don't even want to disclose certain things. But if you talk to the property manager that's in place or overseeing the property, you can get data from them, right? About the tenants, if the tenants have been, paying late, or if there's any troubled tenants, they'll let you know. They'll often tell you things that the broker will not. All right, so understand operations more clearly, and you get an idea of market rents. They're really good at that. If you're trying to find what the average rent is for the area, you want to call a property management company to ask them what the rents are for that specific area. Aside from using Rent-A-Meter or, for rent.com, property management companies are one of the best ways to find out what those rents can go for. Right, and then you also want to take a tour of maybe some comparable assets that's in the surrounding area of the property that you're looking to take down. And then after you do all that, you're going to want to revise the model with updated capital costs and market rents. So during this whole entire process of analyzing and taking the deal down, you want to go back to your underwriting formula and then revise any data that has come across that you noticed, so you can have a better understanding of what the property should be offered at, because this is not your final offer, right? All right, so the next thing is tying up the deal. Once you have revised your model and you tie up the deal, you're going to want to send what's called an LOI, a letter of intent, right? A letter of intent is basically a non-binding agreement, including basic terms of transaction. Right, it's just basically saying the general terms of the purchase. You want to include the purchase price, the deposit. Initially, a deposit is refundable, right? That's basically your EMD. And then once you get towards like the second stage, once you have like what's called a purchase and sale agreement, then it becomes non-refundable. Then you have the contingency period, basically the time of when you want to, anything contingent upon buying the property. So if you have a few things to let the seller know, like, hey, before we lock this in, I have to make sure that my cash out refi closes and gets transferred. Like, that's a contingency, right? Small things like that. What's the purchase? What is the purchase is contingent upon, and the due diligence deliverables. And then also your closing timeline, when you want to close on the property, which could take anywhere from 60 to 90 days, sometimes even more, depending on how big the property is. All right, I'm going to give you guys something that I created. Let's see. Actually, you know what? I'll do it later. I'll get through this first, but I'll give you guys a copy of a letter of intent that I created for you guys. It's very, very universal. So I'm glad you guys are all here, because you guys are gonna get a lot of freebies today. All right, so the next thing after tying up the deal and sending your letter of intent, there's an offer process, right? Within the offer process, there's a fully marketed deals. With the fully marketed deals, there's multiple rounds of offers in place. If you're going against a few people that's bidding on the property, right, there's going to be a bidding war. Once there's a bidding war, then they're going to pick, the best and final. If you make it to the best and final, there's going to be buyer interviews, right? If you don't have any competition with people going for, the lower units, meaning anything under that, let's say the 60 units and under, you have a better chance of locking the property up. But most deals that, go in the millions, you're going against like other buyers, that's where they're gonna want like a buyer interview with your investors, right, or yourself. And they want to make sure you have the ability to close and you have the intent to close. So they're going to ask you if you've done this before, you know, if you have any financing that's lined up based on, you know, your debt, your equity, if you're creating a syndication, or if you're pulling the money from a fund. Like those are a few things that they're going to ask you. How are you going to secure this debt, or how are you going to secure this property, right? And you're basically wanting to win the deal, so you want to come in as strong as possible. So once all these above are completed and they accept your offer and you're the winning bid, you're gonna draft up what's called a purchase and sale agreement, or for short, we call it a PSA. Typically, the brokers would set this up for you, right? That's when it becomes binding. The binding agreement includes all the details of the transaction, basically what you've included in the initial LOI, right? And any changes that's made in between, it's gonna state in the PSA. And then finally, you're gonna prepare to hire a qualified real estate attorney. Reason being is because the PSA is it's tailored to every single property that you come across, right? It's not like your regular residential purchase agreement, like a single family home. Every commercial deal is tailored to its own property. So you're gonna draft up a PSA for every single different asset class. So you want to hire a very qualified attorney to help you draft this. And you want to have them overlook any of your contracts. Okay, so that's very important. It's not generally standardized document like a resident purchase agreement, like I mentioned. It spells out all the details of the transaction clearly, right? Your purchase price, your deposits, your contingency period, your closing date, and your buyer and seller allocation of closing costs, right? And then once that happens, you're going to put it under contract under an umbrella entity, right? You're going to sign in that contract to a SPE, which is what we call a single purpose entity. That's to be determined at a later date. And then you want to be sure that this is allowable in the contract, meaning it has to be assignable. So what we mean by that is the contract that you put it under, if you're putting it under an SPE, that contract needs to be assignable. If you're taking it and you're funding it with, let's say, a syndication or a fund, that contract that you made has to be assignable so that you can assign it to your next LLC. All right, that was a lot to take in. So any questions? Hope this helps you guys break down any deals. Go ahead.
No, I got a few questions. Sorry, Stan.
What's going on?
Question number one. You said you would take a contractor to go visit the property.
Say that again.
Okay, you said you would go with a contractor to look at the property.
You don't need to bring a contract to look at the property. No, but you want to, before you go to the property, right? You want to make sure, so you're not wasting your time, that you have a contract already in place so that you can go look at the property, right? So you want to make sure that your LOI, or let's say the broker and seller, agree to your terms before you go and see the property, right? Because you don't want to be wasting your time seeing it if they don't agree to it.
You got a sentence in your contract that says per inspection.
Right. I mean, there's so many different ways to go about it. I'll give you an example. Like for most properties, we don't typically like to go and see the property and waste our time if we don't have a contract that's already in place, right? But then sometimes there's an investor that says, hey, I want to take a look at it and do my inspection first before I send an LOI. So it really just depends on how you want to approach it. It could go either or. You can lock up the property first and then go do an inspection. Or if they allow you to do an inspection first before you lock up the deal, that could be the way too. There's no right or wrong way to go about it. It's just really what the other party is willing to negotiate and accept.
Okay. And then second question I have, is your funds, how you generate your funds for the purchase. You go directly to a bank, or you have any other means of getting your funds?
It all depends on how big the deal is and if you're wanting to purchase this as a group, right? Or if you're purchasing this by yourself. Typically, let's say a 4-unit, if you can afford a 4-unit and it's under $1 million and you have the capital means to do it, you don't have to partner up with a group, or you don't have to partner up with a private money lender, and it's in your bank account, then you can do that. But if you're, a $5-10 million deal that you cannot fund yourself, then you're creating, or you're partnering with private money lenders, right? Or you're asking a family office or a syndication group to help you finance that property. You want to have all these things in place prior. So, it helps you figure out like what's the, how you guys going to take and acquire the deal. And that's going to be important when you're talking to the brokers, right? They're going to ask you, how are you planning on taking this asset down? So they're going to ask you that. So you want to kind of have all those things in place, especially for a bigger deal.
Well, any deal for that matter, right?
So, all right. So everyone's still here. Okay.
And I have a quick question. When they
Yeah.
do the interview, the buyer's interview, what normally kind of eliminates you from not getting the property? Is it more so funding?
It could be multiple different things. Sometimes it's funding, it just depends, right? So you have to look at what you're underwriting, because sometimes, it could be just based on the debt coverage ratio where it doesn't qualify for a loan, right? I'll give you an example as well. One deal that I underwrote this past week, the property fell apart and fell out of escrow because the investor prior couldn't qualify for that loan because it didn't qualify for a DSCR, right? When it was clear on the underwriting that it was like under a one point DSCR, and the standard DSCR is a 1.25. So if it doesn't qualify for a DSCR, that means that you're likely going to have to pay cash for it, or you're going to have to get some kind of means to cover the deal. So lenders won't cover a property if it doesn't meet those specifics. All right, I can go over that later. Does that answer your question? Ready?
Yes, it does. Thank you.
Okay, you're welcome. Okay, so real quick, let me shrink this down. Oop. What is going on? Why is it not letting me? Okay, can everybody see this, or is this too small?
I think it's all right.
All right,
What do
I
you
can make
guys,
it
anybody else?
I'll zoom it in a little bit more.
a little bit more. All right. For some reason, it's not letting me do my shortcuts, but here we go. Okay, stretch this out. 1 second. All right, so this is a deal that I underwrote last night. I believe this one came from Lauren Campbell. Lauren Campbell, are you in here?
Lauren.
I don't think she's in here anymore. I think she might have left.
Oh, she
So
was
anyway,
here.
yeah, she wasn't here. Okay, so anyways, Carlos sent this to me last night. It came from Lauren Campbell. So this calculator gives you an assumption for the next 10 years. And basically, this is a plug and play model where we can take the purchase price and any of the metrics of the property, and you just plug it in and it gives you dynamic modeling. So everything in the blue, as you see here, is going to be a manual input. Anything in the black, these are all formulas, okay? And anything in the red, obviously, it means that it's an output, meaning it's coming out as a transaction. And then anything in the black, obviously, is coming in as anything in the black here is coming as an input. So if we're looking at the multifamily units, I'm gonna give you guys, here we go. Here is. Can you guys see this? Did it pop up for you guys?
Yeah,
Yeah, we can see it.
Okay.
Yeah.
Okay, I'm not sure if it's, so you can see me scrolling right now? Okay, cool. All right, so this is the property. It's out in Miami. It's a 19 unit. All right. It has 8,189 square feet. The purchase price that they're asking is 3.6 million. These are the cash flow. This is the cash that's needed to take the property down at $828,000. The cash flow is generating per month 78.25, and the going in rate would be at a 7.8 cap rate, and the cash on this would be 11.33. Now, keep in mind that these numbers are based on what we call an assumption, right? And based on the numbers down here, this is just a property description, tells you the address, the property type, the year built. So this is what we consider as an OM. This is a lot easier, or more simplified version of an OM, but it basically gives you the analysis and returns of what this property that they're assuming will generate, right? Okay, so this is just an example of it. The year one cash flow right here, the property taxes and expenses from right here, and we'll give you guys basically the same thing, an assumption up to year 30. All right, and then the rent comparables and sales. So this is giving you guys an idea of what to look for, right, in an OM. Most times you'll get all this, and sometimes actually more if it's coming from a bigger brokerage. So these are all the comps in the area based on the same, within this radius of the subject property, the average sale price, right? Comparable rental listings, what you can get per room, per square foot, and then obviously the property photos. So just looking at these photos, this is a little, you can tell that this is a Class C just by looking at it. Okay, so with that being said, right here, this is what we call the rent rolls. It tells you who the tenants are, which unit number they're occupying, if they're active or if they're delinquent, or if they're, if there's any units that's vacant, tells you right here. When the date started of when their lease started, right? The end date of when their lease is ending, if they're on month to month. So this is pretty much like a good rent roll, right? It tells you exactly what it is, and the metrics behind it, what type of rent they're paying. And sometimes they'll tell you even if they're a government assisted tenant. So the more data you can tell you, the better you can analyze the deal. And based on this metric, right, there's 5 vacancies in this unit property out of 19. Okay, and out of the 14 that's generating income, it's only coming in at $17,000 and $650 a month is what is generating. So if we go back to our calculator right here, and we focus where this unit mix is, right? They're all 1-1s. There's 19 of them. The unit square footage is 431 square feet. The average rent based on those units, they're charging at about $929 per month, right? So keep that in mind, is $929 per month at $2.16 per square feet. Okay, so I plugged in all these metrics based on the actuals, right? They didn't give me there's not a lot of expenses based on the assumptions. So as far as all their operating expenses, they're paying about $32,000 per year, right? And out of that, it's about 20% of operating costs for the property. And they're asking $3.6 million for it, right? The closing costs typically, if we were to buy this property today, 1% is a good starting point. There's 19 units. Rentables square footage is 8,189. So based on this going in rate, you're going in at a 3.47 cap rate. Now, 3.7 is pretty low, right? When going in on cap rates are based between about like that 3.5 to, it could go as high as like 14, 15%. The higher the cap rate, the higher the risk, okay? The higher the risk of the property from an investor standpoint. The lower the cap rate, when you're starting to enter like the 6%, 5.5%, all the way down to like a 3.5%, that means that that property is basically stabilized. Now, you could use that more as a metric to help you figure out like, hey, is this property, worth my time, by looking at what the going in cap rate is, or sometimes you could use it as a metric to show what we can sell the property off for in the future. So just basing off of these metrics, right? They're asking $3.6 million. The capital budget that we're going to put that as 0 because we're assuming that there's no renovations needing to be done right now. There's no other income right now for this property aside from what they provided. There's an annual expense growth, about 2% is what they put in the OM. So every year the expenses are going to grow by 2%. That capital budget, I just put it down for 0 for now, right? So that means that we're expecting that we're not going to do any type of renovations to this property. Okay. And then basically, if we were to go out and get financing today, I'm going off of metrics that a commercial lender would kind of go off. Because of the interest rates going up a lot higher, loan to values are dropping, right? Because a lot of lenders are now pulling back and being a lot more conservative. So if we're going in at a 70% LTV on that $3.6 million purchase price, the loan amount would be at that $2.5 million, right? Loan origination fee would be about 1%. The going in interest rate for a lender right now ranges, but right now it's at 5.75 is a good metric to go by. And then amortized rates about 25 years. If you find a commercial lender that's going to do 30, even better, right? Because now you're spreading out your financing over another extra 5 years. That will lower down your monthly mortgage rate. So we're also plugging in what the exit cap rate of what they're expecting, which was that 7.8, which is what they mentioned right here. Okay, 7.8 exit cap rate. And then also in the next 5 years, if we were to purchase this property, my assumption is we're going to be paying out a broker to help us sell it at 3%, right? And assuming that we're going to sell this at year 5. So with all that being said, right, you can see based on these assumptions that this property is bleeding out, right? If we were to buy this property today and you look right here where it says levered net cash flow, first year of acquisition, right? This is how much it's going to cost us to do the business and acquire this property, right? Purchase price of 3.6, our closing costs of 36,000. And if we were to pay all cash, we would be at minus $3.6 million, right? And then remember, we have a mortgage that's going to be in place for that loan amount of 70%. So that's going to be at 2.5 million. Any of the loan fees at 25,000. So we're going to be coming out of pocket $1.1 million. After year 1, it's negative $65,000. So that means that this property is not cash flowing at all with the actual rents of $929 per month. And remember, there's 5 vacancies in the property. So at the moment, this property wouldn't be a good deal, right? Because the way that we're looking at this is that we have a few targets to keep in mind. And these target metrics we want to have in here, right? As manual settings, we have it at 15%, a 2 times multiple, and 5% average for a cash and cash return. And the actuals are not even hitting that, right? Based on the current purchase price of this property. Now, that's telling me that this property is gonna be bleeding out if we were to acquire it at that purchase price. So what do? When you're going into a property, you always want to make sure that, you know, you're going to be stabilizing it for the future. So you want to put assumptions in place, right? You're going to go in and you're going to want to budget for renovation. You're going to want to see what you can turn the property over so you can increase your operating income and decrease your expenses. And that will in turn will turn and give you value for your property. It'll increase your value of the property up while decreasing your expenses. And that's the way to, you know, make sure that the property is projecting a future value of what you're expecting. So with that being said, let's go right here. So with that 19 units, if we were to assume that we can put in some renovations, right? Let's change these numbers up. We're going to keep the price at 3.6 million. But remember, in the beginning, we didn't have any capital budget. For a metric that I use to renovate a property, we want to go about $10,000 to $12,000 per unit to renovate so that we can, you know, turn the property around and give it, you know, value so that we can get the best rates in the market. Right. So if we're going to do a capital budget at $10,000 per unit, so that means that we're going to spend about $190,000 in the property. You see how I plug this in? And if you focus right here, it changes, right? So this calculator, all you got to do is really plug in your numbers and everything else will do its own. So if we're going to we're going to spend $190,000 for renovations for the first year, right? And we're going to assume that we're going to complete this renovation in 1 year. We'll just leave it at that. But let's say, you know, it's going to take us a 2-year timeline and we say it's going to be 2 years. Now, these numbers change, the capital improvements right here, right? It's splitting it in half. If we go 3 years, then it's going to split it in 3. So, but for now, we're going to just do 1 year. We're also going to assume that we're going to have capital reserves for the property because whenever you're underwriting a property, you always want to keep 3 things in mind. You always want to put in property management fees because you never want to manage the properties yourselves, right? So you want to consider that. You also want to consider maintenance for your property. You want to put that into reserves. And then also you want to have, what was the last one I was thinking about? Reserves, property management fees, and repair and maintenance. Or is it,
Stan,
what was it?
no, I said, somebody has a question. They texted to
Oh.
me, but they're not able to chat. But he
Yeah.
said, I can't talk now, but could you please ask Stan if he knows why there's 5 vacancies, especially at the price, since there's almost no inventory in Miami and those rents are way under market value. A 1-1 is at least 14 to 16 in that area. This is somebody who is an agent in Miami as well.
Yeah, good question. So that I don't know, right? So I'm just going off of assumptions based on what the data was telling me. I don't know why there's any vacancies in this specific property. I haven't talked to any of the brokers or sellers. This is just based on what they provided, right, on the rent roll. And it could be, you know, it could be any factors, right? Just the area itself. Maybe there's a high crime rate that could deter people from renting in it. You know, maybe the price, maybe their amenities are not up to par from a renter standpoint. You know, there's a lot of factors that can go into why it's vacant. But for this specific property, I have no idea. I'm just underwriting it based on what I see on the rent rolls to answer that question.
Okay, and what did they base that price on?
What did they praise the rents on?
Yeah, when I say they want 3.6, well, what is it based on?
So they're basing this as I'm assuming they're basing this off of their pro forma, right? Going back to here, this is a pro forma assumption. So that's where they think that this price should be at, is 3.6.
I know, but at 75% occupancy, I don't know how they come up with those
Yeah.
numbers.
Yeah, I'll show you guys why in a little bit, but we're just going off of what the data was telling
I'm
me,
trying
right?
to run the numbers in my head here, and it's just that this whole
It
thing
doesn't,
doesn't make
yeah,
sense.
I know, it doesn't make sense, trust me. When I was
Yeah, the
underwriting this, I was
performa
like,
is basically like they're projecting if you were to, upgrade this and then maximize the rents and then get all 5 vacancies occupied or 4 of them, that the performa is saying this is what the projected rents could be. So they're selling it on the projection of if we do as they're planning, then this would make sense at 3.6. And so he's showing you the actuals, like if we buy this at 3.6 with the current state that it's in, then we would be losing money. So they're
Yeah, it
selling
should be
it
based on
on the
it.
projected. Yeah,
It's based on their performance.
yeah, it's based on, correct, it's based on their performa. But I'm just going over why this doesn't make sense at the moment, right?
Well, that's it. That's the question I have. I don't
Mhm.
know how they could come up with this number. Because you're
Yeah,
gonna have to
there's-
put in about 3.8 million. By the
Yeah,
time it's all
there's a
said
few
and
ways.
done.
There's a few ways to reverse engineer this. I'm just going over it so that, people understand why this doesn't make sense, right?
And
Because
then
even-
$900 a month, I'm sorry, Stan, and then $900 a month, is that based on market rate or is that just what he charges a month?
This is just the average based on what the rent rolls were providing, right? Because remember, they're telling me that it's 17,650 per month. If you take that number and you divide it by how many units there are, which is 19,
That
that's
comes
where
up
we
to
came up with that
19.
929, correct? So that's where I'm basing off the actuals.
Okay, well, that's where you got your numbers from. Okay.
Yeah, correct. So
So he's gotta be undercharging.
he's definitely undercharging for sure. So going back to this, where was I? Yeah, okay, so
Hey,
we're
Stan, real
back.
quick, sorry to interrupt you one last time.
Sure.
Why would you divide that rent roll number by the 19 as opposed to just the amount of occupied?
He did.
It's the average.
But you said it's the average of 19 units, right?
Yeah. It's the
'Cause when
weighted,
you-
it's a
because
weighted,
If you
it's a
got
weighted
5
average.
vacants, wouldn't you divide that number by 14 instead of 19?
No, because you're gonna go off of weighted average.
Okay.
It's a weighted
Oh,
average
okay.
rent. Yeah, it's not based off of just the average rent, because that makes a big difference, actually.
It's
So you
not
wanna
based
go-
on the occupancy rate.
No, it's
yeah, you
based
still
off
gotta
of
break it
weighted
down
average.
because those five units are still part of the property. So even if they're vacant, the cash flow that's coming in, the 17 grand, is still part of all 19, though only
Right.
14 of them are actually occupied. That's why you break it down to the average of 19, but obviously 5 of them there's nobody in there, not bringing in any cash
So
flow.
by doing it
So
that
then
way.
that would change if there was 5 more people.
Right. Okay.
Where was I? I kind of got lost.
I'm sorry,
Uh,
Stan.
No worries. Just trying to figure out where I was last at. Sorry.
Shit, I forgot. You were hitting like,
Oh,
you're
yeah,
going
here,
something
here.
else.
Here we go.
Okay.
Here we go. So we're back at the capital budget, right? So we're gonna take into assumption that we're gonna be putting about $190,000 to renovate this property at $10,000 a unit. And this is not including any type of exterior renovations, right? Exterior renovations, we could say, hey, we can add in another $20,000. Right, so let's say it's another $20,000 to exterior to paint, the property, to also do any type of maintenance around the surrounding areas. Maybe we want to add on like some other income stuff, like a laundromat. Let's put that into consideration. So $210,000 now is our capital budget, right? We're gonna leave everything else the same. Now, if we were to assume everything stays the same, right? And we were still with the in-place rents of 929, these numbers still doesn't make sense for us. So this property, you would think that it wouldn't make sense, right? But if we could assume that after renovations, we can increase the rents, we can add certain things in the property to improve the rental income, we can increase occupancy rate from the 5 missing vacants to making it maybe like a 5% vacancy, and or a full vacancy at 100%. The numbers that they're giving us in this OM was at $1,800 a month is what their pro forma projected rents are. And how do we come about that is I basically took what the gross rents for what they're projecting for the year and divided by the 19 units, right? So if you take 410, 400 divided by 19 units, it's $21,000, 21,600 per month. And then you divide that by the 12 months. Now you come up with $1,800. So if we were to assume that this property was going for that $1,800 a month and it's fully renovated, now look at the numbers, right? We are just assuming that we can bump up the rents and everything else in between. But this doesn't account for any capital reserves. This doesn't account for any property management fees. This is just assuming that this is fully occupied, right? Look at what the metrics look like now, right? The levered IRR is 26.6%. This levered equity multiple is 2.92, and then we have an average cash on cash return of 11.25. But that doesn't paint a super clear picture because we want to make sure that, you know, other things are in place with a pro forma. You always want to make sure that there's reserves in place that you want to put away on the side every time that you're collecting rents, because for a rainy day, something could happen, roof goes out, the roof is old, needs to be replaced. Let's say an HVAC system goes out, you know, you want to put away for any vacancies. So those are the things that we want to assume, right? So if we consider that, let's say we put in about 3%, or let's say 2%. We want to put away 2% of capital reserves per unit. So every unit, we're going to put away $432, right? We're going to do maybe an 8% on property management fees because we're not going to be managing it ourselves. So all these things, it increases the operating costs, but it also helps you analyze the deal so that, you know, you can put these reserves in place and it gives you a better, more accurate number to keep in mind, right? So if we took out that property management fee, right, the levered IRR would be at 25%. But if we put that 8% in place, now it just went down to almost 20%. So small things like this makes a big difference on underwriting a deal. But now in assumption, right, we haven't changed anything else. This property is still going to be at 3.6, but now after year 1, right, going into year 2, this property is starting to cash flow. Year 3 starts to cash flow, year 4 starts to cash flow, and then we're exiting on year 5, right? So it might be a little bit confusing, but once you start understanding all of these metrics in place, you can understand that where your projection for your future rents are going for this property, right? And you can play around with it. It's really up to you as the investor, or if you're representing a buyer, what you want to put for your target. But these are good targets to keep in mind. Here's a little guideline that I put in here as far as like what are good metrics to keep in mind for cash on cash and equity multiple and your IRR, right? So cash on cash is dependent on the business plan, your development. If there's any heavy repositioning, your cash on cash, a good metric to keep in mind is that, you know, between 0 to 2%. I have mine at 5, so it's light repositioning and to stabilize the property. That's a good metric, is 5%. Some investors like I deal with, they like to have a minimum of 8% or 10%. So it's really up to your end buyer. These are good equity multiples to keep in mind. If you're planning on holding the property for 3 to 5 years, anywhere between that 1.3 and 1.5 multiple is good. If you're planning on holding it longer, around that 7 to 10 year, a 2 to 3x multiple is a good metric to keep in mind. But if you're hitting these metrics, in 5 years or less, then that's always good to the end buyer as well, right? For the IRR, here's some low risk buckets and up to a high risk bucket, which is your opportunistic. These are your classifications that you can look for. So I'm just using this as a guide for you guys to keep in mind whenever underwriting a property. So with that being said, this Miami deal actually looks pretty good based on what they're telling us, right? If you can get the rents up to $1,800, this might be a good deal. Because if I'm saying, hey, I want a target price of 15% IRR, a two times multiple, and a minimum of 5% cash on cash, this is something that I would offer, right? I have some cushion because obviously if they weren't to accept that price, then I can always manipulate it so that it works in my favor. But as of right now, based on these numbers, this is a good deal. But based on the numbers that is performing, actually, it's not a good deal, right? So it just really depends how you look at it. If you know for a fact that you can operate this property and bump up the rents and spend $210,000 for capital expenses to improve the property and get it back to, or get it up to market rents of $1,800, then this property is something to consider. Going back to Gillis, I know you had mentioned about why $3.6 million wouldn't be ideal, and I'll tell you. So I'm going to show you if we were to reverse engineer this property, okay, based on what they're asking for, right? Their exit cap rate was at 7.8. They have a vacancy of 30%. Well, let me see, 19 units, so 14. Oops. Hold on 1 second. Let me change this real quick. So they have 19 units. There's 14 that's vacant. If we take those two and divide it from the physical occupancy to the number of units, yeah, it's 73%. So it's 24% vacant, right?
Yeah, no, I was
So-
just doing a calculation in my head, so I come up with 75%.
Yeah, so
Pretty damn
okay.
close.
So let's go 75%, right? 75% occupied, 25% vacant. The pro forma is, they're saying, is $1,800. We're going with a capex of $10,000. Let's say 12,000. This one. The number of units, there's 19, and then let's see, 0 here. So their operating cost right now. Let's see. Is that about, so they don't have any property management in place, so they have a very, very low expense rate.
Huh.
You see how they're asking 3.6 million,
Uh-huh,
right?
that's the catch.
So you can see how you can work backwards on these dynamic calculators, and you can pretty much get an idea of how they're coming up with these numbers. A stabilized cap rate of 7.8, which is what they're asking for, seems like it's a good, because obviously they're assuming that there is already 25%. They already considered that in place. But let's say you were to get that at 5% and occupy it. So if this was at fully rented market value and there's only 5%, yeah. So that means that there's a lot of money still to be made to capitalize on this property. You see the big difference? If you increase it by 20% on vacancy,
Yeah,
or occupancy, yeah. So that's what it's telling us. That's the story, right? Here we go. Let me put this back. All right, and then, so for everybody that's still here, let me give you guys a gift. I'm going to share this with you guys. I know I promised you guys a calculator. So I'm going to give you this entire thing. Just don't share it with anybody. Keep it in the Powerhouse team.
Everybody look under your seat.
Oh yeah, and all the redneck girls say hell yeah.
So I just gifted you guys that the calculator. You guys can play with this. All you gotta do is literally go to file, make a copy for your guys selves. And you guys will have it. So remember, everything in blue is the ones that you want to type in manually. Don't type in manually on any other color, right? Leave the blacks in because those are where the formulas are at. And you could use this to basically underwrite any deal that you pretty much want. Here's a formula cheat sheet that I created as well. So if you want to find out what the purchase price of a property, as long as you have the NOI and the cap rate, it'll calculate for you. So if let's say I'm gonna 8% cap rate, and then it's a 50,000 NOI, your purchase price would have to be at $625,000. So this is a pretty neat calculator. All you got to do is basically type in all your metrics and it'll spill out all the numbers for you dynamically. You can find out, if you want to do a value add increase, if you raise the rents to $1,000, your current rents are in place is 500. So that means that the average unit price upside is $500 by taking the difference. There's 19 units in the property at a 95% occupancy in 12 months at an exit cap rate of 7.8. Now you've just added $1.38 million in value from just doing that, right? So actually, let's do more realistic, right? Their current rents is $929. By increasing rents to $1,800, there's an $871 upside on monthly increase on the rents. So this property has a projected increased value of $2.4 million. And that's why people love multifamilies, because you can do these simple things to the property by adding improvements to it, and that will give you added value to increase. So when you're ready to sell it off, it'll determine what the value should be at, right? So if let's say you stabilize it and the market rents that you could exit at is 6 cap, everything else remains the same. Now your added value would be at 3.144 versus that 2.418. Here's a return of cost on the calculator. Basically, it's just like your operating and construction metrics. If your current rents are $929, your renovation cost per unit is that $10,000, right? Post renovation is $1,800. You've just returned. You just gave yourself a return of 104.5% from doing that on your renovation. All right. There's 19 units, exit cap rate, and the difference, the value difference is at $2.5 million. And then the last one, loan sizing. Basically, if just kind of get a better idea of what a lender would loan at, right? So if let's say it's at $3.6 million purchase price, the appraised value is what you would exit at. So if the appraised value, this would be the appraised value right here. Actually, it's right here, 3.140. So 3.1. Actually, give me a second. Appraised value, if it was just a cash, it would be a 5.58. So let's use that metric. All right, closing costs for this would be $36,000. And let's say the terms is the 5.75, 25 years. Net operating income. The net operating income for this property is $271,898. So $271,898. Right? A lender is going to choose between a loan to value, loan to cost, a debt service coverage ratio, or the debt yield. Right? So this is what it's going to tell you that a lender would loan based on the maximum amount. And what they're going to choose is the least of all four, right? So based on the loan to value at 70% on that purchase price, they're going to be able to loan you, or actually based on that appraisal value, they're going to be able to loan you $3.9 million if this appraised value would be at that 5.588. If it was based on the loan to cost, you can double click on that. This is all the formulas. At 65% loan to cost, it's basically telling you what's the, if you take the purchase price plus your closing costs and renovation. Renovation I didn't add on there. Let's say the renovation is at 210,000. So let's say it's 246. So the loan to cost a lender would lend you on would be about 2.5 million. If it's based on a DSCR of 1.25, which is standard from a lender, they will lend you on a $2.8 million loan, and then a debt yield, which is basically what a lender would make or what their standard is if they were to take back the property and foreclose on you. They would still be making 3.398, but this is what they would, I'm sorry, they would loan you on a 3.398, but they take the least of all these numbers. So in this situation, they would lend you on a loan to cost, right? 2.4 million. 1.35, let's say a lender is gonna lend you on a 1.35, then it would go down to a 2.6. So I hope this helps. This is a calculator I know you guys been waiting for, so appreciate everyone that stayed behind. This is your guys' gift. Please, like I said, do not share it outside of the Powerhouse team. If you guys have any questions, let me know. Feel free to play with this. It's a really fun calculator. It's a lot more simplified than the one I had previous, but yeah, there you go. Any
Thanks a lot,
questions?
Dan.
Yep, you're welcome.
Thanks, bro.
Where is it at in the chat?
You have to scroll up, buddy. It's all the way up there. I dropped it in around 4:30. Cool. Any questions? No? All right.
Good stuff, man.
You're welcome.
Thank you,
Thanks,
Stan.
Al. You're welcome. Yeah, so just FYI, this calculator, I'm glad I found it. It's actually, I've taken another course just to basically help underwrite and kind of look at it from an institutional standpoint. The guy that created this is Justin Kibble. So he's the one that created these calculators and put it in place. But it's amazing. These are the type of metrics that you want to consider when underwriting properties, because it gives you a lot better understanding of what the property is generating. But it also is a deep dive of, you know, more metrics that are a lot more dynamic. So it's a lot more defined than what I was using previously, but I think with this, you guys can get better accurate numbers for properties, so you know exactly where to offer at. Play with it. If you guys do have questions, save it for next week, Friday. That's it. Anybody have any questions?
Where are you going to dinner?
To Beauty in Essex. It's a restaurant my buddy owns. He's a celebrity chef. He's on what do you call that? The Food Channel.
Oh,
The Food Network.
nice.
So they have one in New York. They have one in Los Angeles. But it's a really good restaurant.
Sweet. We'll have
Yeah,
fun,
that's-
man.
Thanks, buddy.
I dropped the other one, the other spreadsheet for you to look at too in the group.
Oh,
You know.
sweet. Okay. Yeah, we're gonna have to get together on that. For anybody that's still here, me, Tom, and Carlos, we're 3 of the 5 partners that's gonna be doing the multifamily. If you guys do come across any deals in Texas, please let us know. I think Carlos put it in the Powerhouse Facebook group, what our buy box is. We're gonna be focusing mostly on Houston. But obviously, we're gonna be open to other submarkets. The other 3, which is Austin, San Antonio, and Dallas, Fort Worth. We want to target Texas because obviously if you're spread out too thin with other markets, you're not going to be so focused on it, and you're going to be all over the place. So we decided to stay focused on Texas. So if you guys do have any deals, we're looking for Class B, Class Cs, 60 units or under. And we prefer to have a minimum of 8% on the cap rate. And it has to be a value add. We don't want anything that's already stabilized, or we prefer to stabilize it ourselves. So if you guys do have a deal, please let us know. Tag us inside the Powerhouse.
Sweet, guys. Any more questions?
Open it up to the room. You guys can unmute yourselves.
Yeah, don't be nervous to ask any question. I know a lot of people are just learning creative finance and wholesaling, so this is probably like rocket science. But if you have questions, go ahead and open it up, no matter what you have to ask.
Oh, I guess no questions today.
Honestly, would this be this recording be available again? I just need to soak it in. That's kind of like how I learn. I know I can ask questions, but I just need to soak it in a little bit more. That's all.
Yeah, it's being recorded, so Josh usually puts it up in the next few days. He's pretty good about it.
Okay, cool. And again,
yeah.
happy anniversary, bro.
Thank you, brother. Yeah, it's a lot to take in, man. I don't, trust me, you're not gonna get it all in one day, but if you continue to look for, YouTube videos, there's a lot of free content out there on commercial. But if you really want to take it to the next level, then the guy that I would recommend would be Justin Kibble. He's on YouTube. His channel is called Breaking Into CRE. But that's the guy that I'm actually learning more from, just to underwrite deals on a institutional level. So, it's really good content, and you guys get to learn the different terminologies about real estate. If there's something that if you guys like to read, or if you don't like to read, if you like to listen to Audible, it's a book that I would highly recommend getting. This is based on 5 units or more, because commercial lending, it's primarily 5 units minimum. This is volume 2. So I would pick this up, Multifamily Millionaire. A lot of great stuff in this book.
We just started it though too last week.
How legit is it?
It's fire, bro. And like for a lot of people who are just getting into multifamily, like I'm just getting into the shift. It is a lot different from what you look at single family. So at first it's a lot harder to analyze, and you're like, it's so much information. It just takes a little bit of time of looking at it over and over and hearing it over and over. And what makes it easy is if you kind of go and use other resources like YouTube and Google to learn the terminology and trying to catch up to speed. So each Friday you kind of understand what he's talking about already, and then he'll start turning on those light bulbs, because he's actually educating me as I go. I don't know all the underwriting process. I'm learning all that part as well. I just, I can jump on the phone and specialize on that, but as I get to see what he's breaking down, light bulbs turn on for me. And then when you put me on the phone, I start to understand, so then I can go and do my job right. But I could be good on the phone, but don't understand multifamily, and then it defeats the purpose. I can only close on single family. It's a different game than multifamily. So that's why I'm here. I'm learning with you guys. I'm not up there just yet.
Yep, and props to you, Stan, for teaching us every Friday.
Welcome. Thanks for coming every Friday.
Ron, tell me what we're gonna learn.
Yeah, I learn every day too, whenever I teach you guys. So, I still stumble, but you just gotta keep chugging along. I don't learn by just sitting behind. So I'm always continuing my education. There's, in real estate, there's just so much to learn about it. All right.
Yeah, but what you're saying, you don't stumble, you don't learn.
You don't stumble, you don't learn. Exactly. So keep learning, and keep networking. That's one of the biggest things, especially in commercial. You're gonna want to network as much as possible. It's a relationship game. Make friends with a lot of brokers, make friends with a lot of wholesalers, get with guys in the Powerhouse that have an understanding of multifamily. Just because if you guys really want to get on the commercial level of it, and you want to start investing in it, you want to be prepared. It's very different from single family homes. You know, we
yeah.
analyze deals a lot more different. The terminology is a lot more different. So, you know, start making those contacts, you know. Oh, there she
Watching
is.
Friday videos.
Yep. Lauren Campbell's back. Thanks for sending that deal to us for us to underwrite. I don't know.
I'm back. Yes. No, I've been here, but I have another screen open on the laptop. So
Oh, gotcha.
yeah.
Yes.
But what do you think about it? So is it a good deal?
I mean, it's a good deal if those numbers are obviously, the performer looks good. As is, it's not good. I wouldn't offer that price as is.
Mhm.
That wouldn't be the price that we would be at. I mean, it's really tough.
Yeah.
Oh, that's another question I had earlier. Yeah, they wouldn't take any less for it, huh?
Well, I haven't really gotten to the negotiations yet. I didn't know what number was a good number.
So for that value add, they do have that considerating, well, actually, they have that consideration with the vacancy of 25%.
Yeah, they did. You did show that to us. So
Yeah, so they actually, hold on, give me a second. Let me see what they, let me just make sure, because they're asking 3.6 million. Let's see what's a good offer for that one would be, just so.
at 2.6 million, it would be a better deal.
Yeah, so it's basically they're asking 100, almost 190,000 per unit. I don't know what, you know what you have to ask, find out what the average price per unit for a class C is trading at right now.
Mhm.
That's a value add, because the value add unit is different from a stabilized unit, right? So in Vegas, something that's stabilized on a class C right now would be trading at about 150,000 per unit. And let's say it's a value add, it would be trading basically between like 75 to about 100K. So find out from,
being evaluated as a condo.
yeah, so find out from them what they would be trading at on a normal price per unit on a class C. And then find out also what's the market cap rate for a class C. Right.
Okay. Market rate. Okay.
And then from there, we could probably get a better understanding of where we need to be at. Because if they're already considering that it is a 25% market vacancy, then this might be a good, actually, this might be a good deal.
Okay. So that keeps me hopeful. So I'll contact her tonight and see what she says.
Yeah. Cool.
Thank you so much. I appreciate you breaking this down.
Yeah, you're welcome. You have the link for the calculator that we posted?
Yes, I have everything.
Okay. So those numbers are basically what we would have to, I mean, those numbers look really, really good, based on a future projection of that $1,800.
Mhm.
So.
All right.
So just copy whatever it says in there, because I already put into assumptions like certain metrics where it would need to be at. But yeah, it doesn't cash flow for year 1, but it does cash flow year 2, 3, and 4.
Yeah, I saw that. Okay. Awesome. So thank you so much.
You're welcome. All right, guys. I gotta get going. So appreciate everyone's time. You guys have a great, wonderful Friday. And we'll see you guys
Thanks, Dan.
next week.
Happy anniversary, man. Enjoy your dinner.
Yeah,
Oh,
happy
yeah,
anniversary.
Absolutely. Happy anniversary.
Thanks, guys. Appreciate
Enjoy.
it. Have a good weekend.
Congratulations.
Thanks,
Thank
Tim.
you. All right, guys. Bye-bye.
Bye.
Bye.
No, not too many people. What do you guys think?
I just got on, so I didn't hear everything, so.
What's up, guys?
What's up, guys?
Not
No, you
much.
still there?
Yo, yo, yo.
Not much. What up? I got
What's up,
a
G?
couple meetings, so I'm not gonna do too much right now. I just have one more meeting real quick, and then if you guys want to, we can do some calls today. If not, I'm probably gonna be rolling off calls all day tomorrow.
Up to you, bro.
Yeah, I mean, I do have a meeting right now, so I'm gonna be jumping off myself. It's up to you guys if you guys want to role play or do some live calls. You guys can keep it going, but I'm gonna hop off for a bit. I may jump back on, may not, but I do know that I have some calls after the meeting, so I still got to make some seller calls. Oh, and
Okay.
Gio, somebody else sent me that same lead that you sent me, and I guess now they're open to terms, not just cash.
Sweet.
But I told that person, because he wanted me to work it with him, I told him that I'm not gonna work it with him because I'm already working it with you, and that would just be bad on my end. So I just told him that I wasn't gonna help him out on that one. But they're open to terms, so like I would get back to
Yeah, he didn't tell me that though.
yeah, I guess now they're open to it. So I would get back to it because that changes the story now. If it's on terms.
Yeah, because I told you he was he's a wholesaler. And I guess he's been following pace, and he's got another group that he's following. So he's basically in the same game than we are.
Yeah, so just touch base with him and see what's up with him and everything, and how we can structure it.
Okay, we'll do.
Cool, man. Cool beans. Well, guys, I'm
I
gonna be
got him
jumping
down
off.
to 3 already, so
I think
But-
they were talking like 280 or something like that. So
now he's at 280.
yeah, something like that. So what he just sent me all the info. I'm like, oh, I already seen this exact deal. Seen all the photos, seen the whole deal already. Looked at it. Looked at the comps, and I just said, not really too interested because the comps aren't really there. But on terms, it's a different story.
Snatch it up, Gio.
What's up?
Yeah.
Snatch it
Guys,
up.
I'm gonna jump off. You guys can do your thing, okay?
No,
All right, player.
All right,
All
later,
right.
sis. Later, guys.
Later.
Peace. Peace.
All right, so Zach asked, do you want to do any live calls? Anybody have any calls? Or you guys just want to role play?
I don't have any live calls, but if you guys want to role play, I'm fine with that.
All right. So what are you gonna do?
That's it. Anybody want to be the buyer or the seller? Anybody has left? We still got 13 people on the site, so. Anybody want to learn? Let's get it on.
Hey, I'll be a buyer. I have my wholesaling script, like I said. I'll be a buyer if you guys want. I haven't been practicing. I wrote it down today. Just try to write it out, pen, and it's been so long since I did it. I was just slipping all over the place.
No worries.
So
Okay.
Bill, you want to be the seller?
Anybody wants to be a seller?
Go ahead, Jill.
All right. All right. I'll be the seller. Okay.
Cool.
Got so many volunteers.
So here's the deal. You're a distressed property. You live in a crappy house, run down. That's what I'm looking for, fixer-upper properties. So I'm calling you because I just drove by your house and I see that it's a broke down pile
So
of
you
crap.
get the
with
411
lawn
already,
grass.
huh?
Yeah. 411 before I dig in around here. So yeah, I'm ready
All
to
right,
start
what
doing
do we base it on,
construction.
5 or 3?
Huh?
What do we base it on, 5 or 3?
What do you mean?
500 or
Oh, the
300,000?
price? 500,000 is more my area, but I try to pick them up for 300 because that's what I'm used to and that's what they used to be. But now if you fix them up, they're 500,000 and they rent out around 2,300.
All right, I'm game.
3-bedroom, 1
Come on.
bathroom.
Bring it on.
Okay. Ring.
Hello.
Hi, my name's Zach. I'm with Holligate
Hey.
Services. Is this Gio?
Yeah, that is.
Gil?
What is this
Hey,
about?
Mr. Gill. Great. I believe you own the property on 123 Main Street. And I was calling because we're buying properties in your area. And I was just checking to
Oh,
see
okay.
when you may plan on selling.
Well, I just started to put it on the market, so, but I'm open to any suggestion.
Oh, you
What's your
just
offer?
you just put it on the market? Great.
Yeah.
How long have you lived at this address?
For about 7 years.
7 years? Excellent. Where did you move from?
I moved from Massachusetts to Ohio.
Massachusetts to Ohio? Good for
Yeah.
you. How did you even pick this area?
Just job. I
The
didn't
job?
pick it. The job picked it.
The job picked it? Okay, excellent. The job picked it. So if you were to move, where would you go next?
Yeah, I'm tired of the cold.
Tired of the cold?
Mm-hmm. I'm thinking about following the ducks.
Following the ducks? Down where it's warmer, huh? Down towards the equator, huh? How are you gonna get there? When would that be?
Well, it's gonna be further south, so I can get warmer water. You know,
Okay.
I'm getting
Warmer
older
water.
and my bones are getting more brittle, so I need something a little bit more, more healthy for me.
Yeah, that's what I hear. The warm weather is better on your bones. So if you're to move, when would that be?
Oh, I'm fixing to retire next month, so I guess
Next month?
next month or next month, within the next couple months, I guess that would be ideal.
Oh, in the next couple months? Great, fantastic. Well, gals, we're investors and builders, and we're interested in properties to improve or develop. We're not concerned with the home's current condition. So if we could buy your house at a price and term that works for you without even listing it, is that something that would be of interest to you?
If I don't have to pay any real estate fees, sure.
Yeah, that's exactly what we're into. So here's what I mind doing. Sometime when it's convenient for you, I can stop, take a look at your property, tell you realistically how much we can pay for your house in its current condition. Then from there, you can decide for yourselves what's best. How does that sound?
Sounds good. I'll be home tomorrow.
Great. Tomorrow, what time? 10 or 1 a.m.?
I'll be home
1
all day
p.m.
tomorrow. My day
All
off.
day tomorrow? Okay, well, it looks like my schedule's open at 10 a.m. So let me ask you a question. What would you like to get for your property in its as-is current condition that's worthwhile for you to sell?
Let's see. Well, my property is. Say this best. I keep that in mind.
Yeah, it's
I
cropping.
mean,
You're old, you want to move down where it's warm.
I mean, I've been there 7 years, so it's got a little bit of wear and tear, but overall, it's not in bad shape. So I would
Okay.
probably take around 450 for it. That would be
450?
my offer.
Yeah, that's a pretty good price, actually. I think we come pretty close to that. Usually we start at about 90% of what the house is worth if it's rent ready, or I can put it and list it for you. So here's what I'm gonna do. I'll meet you tomorrow at 10 a.m. We can take a look at your home and property and tell
Sounds
you
good. I'm pulling out
realistically
a
what I
pot
can
of
pay
coffee.
for it. Awesome. Thank you, guys. Thank you for your time.
All right.
That's all I got. I got an appointment set, then I'll meet him there and I'll talk
That's
to him in
it?
person. I'll bring you a bottle. Yeah, I'm buying it cash, dude. I got people in my area. I know the property I can sell for 450. I'll go down there. I'll talk you down about 30 grand from there and we'll make a deal.
Okay.
So
That's my
wait,
plan.
okay, so Zach, so you're just gonna be a straight
Yeah,
cash
that
buyer.
was a little too.
Yeah. So I'm sorry. I'm joined with you guys and I'm a cash buyer. And then if the stuff doesn't work, well, I'm with you guys. So I'll send it to you guys.
All right, so, okay,
All right,
so I'm gonna
give me a
say,
minute and I'll criticize it.
Okay.
so, okay, so, I mean, even though you're a cash buyer, like, you don't know the conditions, so you're going there not knowing, so you kind of want to get heads up prior to. I would, even if I am a cash buyer, right?
Yeah, I hear you.
So, the 4 pillars, you still want to go through the 4 pillars, even though you're a cash buyer, right? Because you want to buy, if he's saying he wants to sell for 450, but he needs 150 just to get it up to sell, like, how do you do it? I mean, are you just taking it as is and selling it off to somebody else that's just gonna put it back on the market or fix it and flip it? Or are you doing that
Missed a lot of
yourself?
those questions, like you're saying. You're right. Hit the 4 pillars.
I mean,
Um,
so
A lot
okay,
of
so
times, if
just
I get somebody that's okay with it, and I could go meet them at their property, it's a lot easier to talk to them in person and kind of walk through it, spend the day with them. I kind of just, I missed a couple of steps, but I kind of just try to verify and get an appointment is my goal.
yeah, I mean, it's all good, but I mean, even if I was a cash buyer, I'm not gonna want to make an appointment if I don't get some type of estimate on what kind of work. So say the HVAC is shot, the roof is shot, they have plumbing issues. That's gonna eat into, you know what I'm saying? You're not gonna make, how are you gonna make money?
Yeah,
And I
Even
have
if you're,
to, no, I'm back now. I have to agree with going on.
yeah,
yeah,
I
so I
agree
mean,
with you.
say he's
I
saying he
agree.
wants, he's saying, okay, I want 450. But the reality is if you gotta put 100K into it, no, you're not gonna give him cash for 450 because
Yeah,
you
you
know
gotta
you
find
gotta put
out what, I'm
100K
sorry,
in
hon.
it,
You
right,
wanna
Jill?
find out why I want 450 for it,
Right,
to find out the condition of the house,
yeah.
find
Get
out what
his
the
motivation
property.
because then you could talk it down. Even if you are gonna meet him in person, get his motivation. Like maybe he has to move. Like Gio, did he even ask you what your motivation was for selling?
Well, he basically, yeah, he kind of did. Yeah, he did ask me what my motivation was because I was ready to retire, moving south. So
Okay,
he did accomplish that part. So he
okay.
got one of the pillars down.
Because in that way, you just like, I mean, even if you're gonna go and buy cash, I mean, you're gonna have to drop that price. If the HVAC's messed
Mhm.
up, you're gonna have to do some, like basic stuff just to bring it up, even if you're gonna flip it and rent it, you know? So, I mean, I would have
Yeah,
went
the
in and
main
said,
concerns are gonna be in the house is gonna be, the roof, HVAC,
yeah,
the plumbing.
Yeah, I should have went through each one.
Bathroom.
electrical,
Gil did say that, Giles did say that it was in good condition. It's kind of a little bit worn from living there for 7 years, but that was it.
yeah,
Because I tried
yeah,
Yeah,
to
well, I
ask him
didn't
about
want
the
to make it too
conditions.
easy on you.
You're right. No, you're right. Like I said, I haven't been on the phone for a week now. So
it's okay. I'm
you're
still
my
new
first
too.
call in a week. No, you're good. You're good.
I'm
No, that's
still
why
new
I'm here.
too, but I'm just like learning based on like we listened to a Selecron just right before I got on here when I was picking my son up. I listened to Lowe's do another call and he ended up getting it on sub 2 just because the price that he was wanting and the amount of money he had to put into it, he wouldn't have no spread and he wouldn't be able to make no money out of it. So I don't know. Let me ask you, Zach. So you go and you buy cash. What is your exit from these properties? Are you just fix and flipping them straight out? Okay.
That's the plan.
So, okay, cool. So
Okay. And
in
don't
this
forget to
market,
ask people if they have a mortgage on it.
yeah, you want to know that.
And
Because even if
find
you're,
out what the rental value is over on the area. And how
yeah,
come if he doesn't wanna, you should ask him why he doesn't wanna rent it out,
right.
so he
Because he
can
can
rule it
rent it.
out.
Yep.
And that's part of the 4 pillars.
Or even you can go and do an ovation, you know?
Yeah, that's what I'm
As a-
hoping to do. A lot of
Innovation is
those.
a last resort.
Yeah. But I'm just saying you have to, even if you're a cash buyer, you got to go through the 4 pillars because you don't want to buy it, especially in this market. I don't know where you are, but I'm in Cali. So no matter where you are, you want to make sure that you can either cash flow, fix and flip quick without having to put a whole bunch of money into it. And then make sure like, if they have an existing mortgage on it, are they behind in any other payments? But that was good. You were pretty quick though, Zach. You got straight to the bottom. But even as a cash buyer, you still want to go through your pillars just to make sure you're not losing money or leaving money on the table.
I
Right?
hear you.
Because you
I
want to
hear
get the
you. No, I
max.
appreciate it. Nope,
Yeah,
I need all this. That's why I jumped on because I haven't been
she's beating you
script
up, that's hot.
practicing.
I mean,
That's what this
Look,
guy likes me
I
doing
did much
anyways.
better, Gio, than the last time because Willie went
you're
easy
getting
on
better every
me.
day, honey.
So if I was doing it, I'd be like, okay, Gio, so you know what? What's your HVAC look like? Is that working? Do you
Mhm.
have heating and cooling? You do? How old is it?
Yeah, exactly.
And then
Yeah, ask
what's
how
the
old the
condition of
roof
your
is.
roof? What's the condition
But
of the
those are
roof,
big
Gio?
expenses. Those are huge expenses.
Yeah, and then I would fall
Make traffic
into,
can look anywhere
so,
from $10,000 to $16,000, depending on what roof. You're gonna be looking about $25,000 to $35,000,
correct,
depending on
and
the
that's gonna
size of
eat
the
into
house.
your profit. So, and then I would say, like, you know, is your
Kitchen
plumbing working?
renovation is about 30
Is
grand.
your, right, is your electrical working? Cool. What do you think the rents? I think Gio said it, because
Well,
I wrote it down, 2,300 in rent. I wrote that
no, I
down.
did not.
No? Okay.
That's
No,
what I
'cause
said.
it was
I
Oh, you
did
never.
said
a
that?
rent.
Okay.
Cause I planned
Okay,
on
cool.
talking about all that stuff, but then I said, oh, 450. I'm like, damn, in my area, I have a lady right now with the 1031 exchange. She's gonna buy it right now. I'll go there, talk you down 30K, put assignment fee on there, sell it for 410, you know, around there. But after those major appliances, I should probably ask about that. But I know a lot of
Yeah,
times when I
no,
cold
what,
call,
because
I
you
will
want to,
sell you a piece of shit for 450. Yeah, of course, I'll come out ahead.
yeah,
of course.
but the thing though, too, Zach, is that you want to prep your seller. That everything
Yeah,
that you
no, I
talk
hear ya.
about now, so when you get there, even if you are doing a walkthrough, you're like, cool, you know, you just, when you're doing your walkthrough, you're just verifying everything you got on that call previously, so you're not wasting your time, right? So what if you go
Yeah.
there and everything he said was crap? Now, this house that he wanted to sell you at 450 is actually, it's going to cost you 600K, because now you got to put 150 plus into it. So it really wasn't a deal for you, where you could have spent that time with somebody else that you pre-prepped, and that you know exactly what it was going to cost you to fix it, and purchase it all up front, because you don't want to waste your time, right? Because time is money, and you want to make sure that you're prepping that seller ahead of time. You know exactly what you're getting before you even go there. So then you're just going there for checks and balances, get them to sign that assignment contract, right? Boom, we're done.
Yeah, I love it.
What did you say,
No,
Gio?
you're right.
No, I don't know. What did Gio say?
I said, tell them how it is.
Yeah. And it's like, you guys are so much further ahead, but I'm just learning that's what I'm just looking at according to cost.
No,
So
but you
okay,
what?
so
You've been paying attention, so that's good.
yeah. Because I'm gonna start like hitting the ground hard. So that was good though. That was good.
Yeah, I mean, his
Yeah.
approach was good.
You guys' talks and your guys' comebacks was very well. And I'm really glad that I did it and had you guys talk to me about it. Because like I
Yeah.
said, I've been slipping up, but I don't practice sub two. And I haven't been practicing my script when I've been cold calling. And my plan is to buy fixer upper houses around my area really crappy. So I need to get back into just practicing that, because I was cold calling with a different script and stuff. And that's why I
Yeah.
was doing that. So that's
I mean,
all.
it's cool that you're
I need to
cash, but
master one thing.
yeah, it's cool that you're cash and you guys can, you know, chime in. But I wouldn't come right out the gate saying I'm a cash buyer. I just wouldn't. I would just say, so what do you think the property's worth? What are you trying to get? Because then it leads you into, yeah, you probably could get it sub two. You probably get it seller finance. You know what I'm saying? So you're not coming out all your cash up front, and then you can go ahead and, you know, take whatever you need to fix it and still make a profit, right? You're getting that sucker on a sub two, or you're getting seller finance, where then you're doing that where you can save you in some cash. You can put a tenant in there and get cash flow.
Yeah, no, I love
Right?
that. That's why
If
I'm
that
here.
doesn't work,
Yeah,
then
no,
I'd be
that's
like,
why I'm
well,
here
look,
listening
hey,
to this stuff.
And,
Yeah.
you know, can I say she's much newer than all of us?
yeah, I am.
Yeah, but she does other stuff, real estate stuff.
No, I
No,
don't.
but
I don't.
nonetheless,
Well,
I don't. I'm just like, I listen to Los, and the thing about one thing that he said that hits home to me. So he was like, once you learn how to structure a deal and think on your feet, it's so much better. And so I just been listening to him, like literally been binging. I just actually sold a realtor here locally on,
Nice.
and I don't even know what I'm talking about. I told on the last call, I just repeat everything that Carlos says. And like, he is like hooked. Like, I have him working for me, bringing me properties. But I would say, Zach, you know, like cash offers are just like anything else in our CF and sub two. It's just another technique, but I wouldn't come right out the gate with that, because you have other things that you could use, right? If you could save your cash and still get that deal and use that spread to get something else, maybe multiple other properties, I would do that first. If they're being hard nosed, because cash is king, you'd be like, hey, look, I get it. You want cash. So what's your bottom line? I can't do it for 450. Maybe I could do it for 350, but not 4. Because listen, I'm here trying to make cash flow, and I'm trying to help you out too at the same time. Maybe you might want to just list it.
No,
Have you tried to list it? Maybe you could get your 450 listing it, but if you list it, you're gonna have to pay commissions on your realtors, the closing costs. If you go with me, you won't have to pay that. But let me get it under terms. And then I say, what's under terms? Hey, let me give you your 450. What is your absolute to get out? And so maybe they say, hey, well, I really want about 20K because I want to pay off a credit card and buy a new vehicle. Cool, we can do 20. And then we'll do the rest on terms. How about that? Give me a 5-10 year term and I'll pay you. So maybe rents go for 2,300. I think I can get a renter in there for like 28.3. And then I can kick you about 200 a month. What do you think about that? And they were like, yeah, no, because in all actuality, that the rents are pretty high, right? So you start in
gonna be a
low.
little low right off the bat, but yeah.
Right, you start in low, like maybe 2,800 I can rent it for, and I can kick you back to 100 a month.
You want to start a little higher.
Yeah,
You don't want to scare them away.
Yeah. Well, I mean, I don't know like where you guys are at, but in Cali, that's like way low. But I'm just giving Zach some ideas on how to do it. And at the same time, I'm talking myself into it. Yeah. Yeah. I'm
But it sounds like you know what you're doing. So when you go in there, you'll know what you're talking about. So
exactly. So I'm being the seller and the buyer right now. All right. I'm out. You guys, somebody else go.
Where are you at from? Where at in Cali? South Cali? North Cali?
I'm in Southern Cal. I'm in San Diego. Okay. And prices are crazy out here.
Yeah, I have some people that are in SoCal. I was talking to a lady in North Cal, but she was
I'm originally from Northern Cali, but
okay.
I've been here long enough now. I don't claim that no more, even though that's my home. But yeah.
Well, there's a lady that called me earlier that wanted a price. I didn't get a look. She just called me back from a message. If you want to live call her right now, you can. She said, what did I write down here? Just called me earlier right before I left out the door. Her name was Lisa Price. She wanted 340K was plus closing cost was her with the other offers she's getting from wholesalers. So she said she just called me back to check my price since she's already got a couple other offers.
So her price is 340K.
So you're gonna be looking around
340K. I didn't look up her address. I had her give me her address because I was out the door. This was like a couple hours ago. I just wrote it down.
What's the specs? Is it 3424? What?
Huh? I have to look up her address. I'm just telling you, she called me back after leaving a bunch of messages on other people.
You gotta give her a little bit more information.
Yeah.
Well, we can look up the address right now. I'm just telling you, the lady called me back. I wrote down the address. I got a price from her and I asked her why she's willing to sell cash.
What's her motivation?
This show is fire. She'll get it done.
What's her
You want the
motivation
address and the phone number?
I ain't that good yet. Gio, you want to take it? Wait, is Willie in here?
Do you guys know how to do it live?
No, I don't. Actually.
Well, I'm on my cell phone, so I don't have anywhere to look up the comps on everything. But if you can provide me with that information, I'll take it.
I'll do with it. Lou, I'm working on bringing some other leads too, because I don't know. I just hired a call center last week and they ask all the right questions because I'm a construction worker. So going in there and talking about the condition of the house is more my specialty. I do need to practice cold calling because I don't want to sound like a dummy when I call. So that's why I'm on here listening constantly. But it sounds like you pick up stuff because you're really sounds like you pick up stuff really well. I've been doing this for a while, like, a couple months.
Okay, so I'm going to just practice. I don't even know, but I'm just going to do a practice. So, you said her name is Lisa, right?
Yeah.
So, I mean, it's the same principle. How we do in role play? What's the condition? What's your motivation? She already gave your motivation, right? So you're going to ask her the condition, right? What's your timeline, right? You already know her bottom line for the price, but you can't really give her any type of quote or any type of prices until you know, like, is the HVAC still good, right? Is the plumbing still good, right? What else? Is the roof good? What's the
Well, you're
condition of the
learning
roof?
quick.
Huh?
You're learning quick.
Right? So you already know that she's trying to get 340 plus closing costs, right? So you need to know the condition of the place first. But I would just dig into her motivation, because that can kind of help you like really talk her down in price, right?
I agree.
So so like, hey, I'm just gonna go through a scenario like I'm calling. Hi Lisa. She's gonna say hello. Hi, this is Eunice. Hey, I work with Zach. I'm one of his partners. So I was just basically calling you back about 123 Main Street. You told me that you were looking to sell. And so I was just calling to have a little conversation. Do you have time right now to talk? Give me about maybe 10 to 15 minutes. Oh, great, you
I
do?
wouldn't give him that. Yeah, I avoid giving him a time.
Yeah,
Just to ask them if they have time to talk to you.
okay. So do you have time to talk to me right now? Give me just a little bit of your time. Great, you do? Okay, awesome. So he told me that you were interested in selling. So I just want to know if you don't mind me asking, like, why is it that you want to sell? And she may say, well, you know what, I'm just
She wants to
on hard
downsize
times.
because she has grown kids and she wants to move to
Okay.
her families.
Downsizing. Great. Awesome.
Why she
So you want
hasn't
to
listed?
downsize? I'm sorry.
Why she hasn't listed it?
Yeah.
She said she wants to
So,
do it quickly and she doesn't want to fix it up.
okay, so you got
No,
motivation.
nothing.
So she wants
Okay.
to sell it as is. She wants to downsize. So I would just dig into, she wants to downsize and move, right? With her kids.
Yes.
Okay.
Oh no, her
Great,
kids
cool.
move. She wants to move to a family property in Texas.
Okay. So she wants to
She
move with
doesn't
her
want to do any
family.
renovation. Is that correct?
No, she just wants to sell.
Okay, she just want to sell. Great. So that's
Just-
awesome. So
Anyway, I would throw it out her and say, why does she doesn't just fix it up and rent it out? She'd probably make more money.
yeah.
I feel like I asked her, but I can't remember. Like I said, I was running out the door with this one.
Yeah, so you just want to like really dig into that motivation just to make sure that she's truly motivated. So that way, like, she's exhausted all her options. And so like we come in and look like, okay, we can really help you, like the heroes. Like, oh great, you don't really want to list it, right?
But what if she
Okay.
has 3 other offers? Like,
That
I
don't matter.
understand asking all the questions just to
It
go
doesn't
through it,
matter.
but like, why is she
It
gonna
doesn't
pick
matter
me? And it
because the
seems like
fact that if she had 3 other
Offers
offers,
doesn't
she
matter.
wouldn't, if they
The
were
only offer
good,
that matters is yours.
right? Because the thing is, she has 3 other offers. So why didn't she take those 3 other offers?
Exactly.
So
They're
that's
probably
what I
trying to
say, hey,
lowball.
so like Gio said, you would come in and say like, because you always want to make it seem like, okay, maybe I'm not a good fit for you, right? So,
Yeah.
I'm just asking, why haven't you just listed straight out? Oh, okay, so you just really on a timeline where you really just want to get out the property. Okay, understood. But you did mention that you had 3 other offers, right? So what was the problem? Were they lowballing you, or could they not come up to the
Just
number
ask
that
them
you're
straight
trying?
out. What were those offers?
Yeah, what were the offers?
Yeah,
So,
Use a
340K.
Use a little
And they pay
compassion at the
closing.
same time.
yeah, so
Oh,
yeah, so you just really want to do that and then see where they gauge, because the thing
You
is, if she,
gotta use psychology if you want to try to sell.
right. Well, the thing is like, really, Zach, if she was like really gung-ho and she had these great offers, she wouldn't have called you. She would just
yeah, no,
sign
I
and
hear you.
sell
She's
that
shopping
sucker.
around. She wants a higher number. And I just,
Yep.
at that point, I usually get turned off because I don't really know the sub two and I don't really want to argue with them because I'm looking for
You don't have
fixer
to,
upper
because it's all about
properties.
the numbers.
Mark,
Like, one thing
Zach,
you learn,
if you don't want to deal with them, send them to me.
yeah,
That's why I'm calling you guys because that's my plan.
yeah.
But
No,
I
it's
do need
not,
to
Send them
learn
to
it
me.
though.
You got my
it's
number.
not even
Send them
about
to me.
that. Even if you don't notice that too, it's all about the numbers. Because the thing is, she's in Northern Cal. 340 may be low, but when you start getting into the repairs and all that kind of stuff, and the market is sliding, so you just don't want to leave more on the table than you need to, right? You want to go in and lock it up. But if Gio can close it.
This lady is in Atlanta, Georgia. When I said North Cal, I was just asking you because I talked to a lady not too long ago,
Mhm.
and somewhere in California it was like more more north because I talked to 3 of my friends that were in SoCal and they said it was too far away. But she
Yeah.
said for me to come to her property and bring her mom apple pie and have lunch with her and sit down and talk to her. She wasn't going to
Okay.
sell nothing over the phone. But that's why I asked if
Okay.
you were close because she seemed pretty cool and easy to work with.
Oh, okay.
But you apply to a compensation to you gotta use a little compassion. It says, I'm sorry, I'm a little too far. I'm here in Georgia.
Yeah,
But if you want some help, I'll be happy to help you.
right.
Yeah, I worked
Are
on
you
that. She
Let's see
said,
if we can crush some numbers together and see what we can get done so you can get out of your property.
Yeah. And the other thing too that you could do is that because we got boots on the ground everywhere.
yeah,
So you'd be like,
that's why I'm
hey,
bringing them here.
yeah.
She's
So
right.
you can always do just like what I did. It's like, oh, hey, yeah, I can't, but I have my partner, one of my partners that I work with, and they're in your area. They'd be happy to come and crunch some numbers, but let's just do a little brief crunch right now. So we kind of know what we're working with. And then I can swing it over to my partner and they'd be happy to come by with the contract and, look at your place and, we can sign that contract. How does that sound? You can always flip that. Trust me, you can put it out to the powerhouse. We got somebody everywhere.
Yeah, I'm in Florida. You think I'm gonna drive or fly all the way to California to get this done? No.
Yeah, exactly. So it's like, hey, yeah, you can always say, hey, yeah, I have a partner and I'm gonna have to run that through them, but they're actually in your area. And I can have them swing by with the contract and run the numbers that we talked about. And then if everything's copacetic, then we just sign that contract. How would that sound?
Love it.
Boom, boom.
Yeah, boom. Good job. I love that.
Copacetic?
Yeah.
Awesome.
I feel
Anything you
like
don't
Lois
want?
is not in here. Josh, I just did my fantabulous sale. I was the buyer and the seller. And I just was telling Zach how to flip that because he left money on the table.
He did, and she did. She did great. For being a newbie in our group, she's phenomenal.
I'm jealous. I wish I was that smart.
You are that smart. Come on, you've been around us
You
for
are.
a while now.
Yeah, it's just a different way of looking at it, right? And a different way of marketing.
I said I wish I was smart like you, though. That's what I said. I'm smart my own way, special way.
Listen, I just been listening to Carlos and Josh and
Me
some of
too,
the
and I
other
don't.
group members. Look, you'll get there. I just got there like this week. It just clicked. It went on like a light bulb. Like I just told 3 realtors here that are investors that they're coming to the powerhouse, and he's hooking me up with his agents on off-market properties, and he hooked me up with a title company to get NOD lists. And so I just told him, dude, I'm going to be the highest performer. I'm going to make you millions. So you need to sign with me and hook up the powerhouse if you want to learn how to play this game and kill it and crush it. Now's the time. It was like, I'm sold. I'll be there this week. I was like, great. Monday through Friday, 6:30 to 8, 3 to 6 every day. Be on it. So no, that was
you. Thank you. I love it. I love your attitude. That's awesome. Thanks for the help.
Zach, you're gonna be good.
Oh, I know. I'm gonna be great at it. I'm a slow learner, and it all clicks one day, like you said. Just all of a sudden, it's like riding a bike. I absorb. Today, when I was riding my bike, I was easily talking about the plumbing and the HVAC in my head, but when I come on the screen with Geo, I just forget because I don't practice enough.
Yeah, well, one thing you do have though is like you can tell you have a good heart just through the way you talk and that too. And I think that's really going to shine like when you talk to people. So even if you're stumbling a little bit, or just be yourself on the phone.
That's why I'm learning as much as I can so I can talk and understand what I'm talking about. Because when I first started, I went on 2 appointments and I didn't know what I was talking about. And with not knowing what I'm talking about, I felt like a liar and I didn't feel good about it. So I took a step back in the last 4 months. I haven't went on any appointments because I've been just studying and learning, finding you guys. My story to find you guys is pretty incredible. Like, so everything you're saying is right. And once I start getting in front of people at their houses, I'm a master carpenter. I have my own construction company. I don't work right now because I'm waiting to get my own flips, but I'll be easily to talk and adjust. My first appointment, I sent this guy an estimate for his house because I could write up an estimate, and I told him how much it would cost, and he says I agree totally with that. So I have that on my back. I'll be able to send comps with estimates of how much I think the house is worth, and
that's
go
huge.
From there.
That's huge right there.
It's brilliant, but I couldn't talk to people. This right now is just great right here.
Just role play. telling you real quick, I was scared too, like you, Zach. I felt like I didn't know anything. I did my first like call like a couple of weeks ago, I think, when Gio was on, and I was like hecka nervous, but and Willie did kind of go easy on me. I ain't gonna lie. I'm like, he went way easy. I'm like, that was Willie too easy, but I appreciate you going easy on me. But really, it's about, the 4 pillars. Once you master that, it's like no matter what you do, you just ask them, because their bottom line is going to be based on the condition of that property and whether or not they have an existing loan or they don't. All that plays a factor. Like she wants what 340 plus closing, but that's all contingent on like what needs to be done. Is the HVAC working? Is the roof in good shape? Is your plumbing good? Is your electrical good? No, my HVAC is shot. No, the roof is shot. Okay, that's 20-30 grand off the top, right?
You're paying attention.
Yeah. And so if she wants to move, right? I know already at 340 plus closing, what's closing? That's like easy 30 grand, right?
She said closing in her area was $3,500.
Yeah. No, not on 340.
3,500?
Yeah, it's a little bit, it's a lot less than that. Yeah.
Okay. So let's say, with everything entailed, it's like maybe instead of 340, like more like 350, right? But you still got to put a new roof. You still need HVAC, right? So we know we're not going to be able to give her the full price. Like I wouldn't. I would start talking about, either doing an ovation or sub 2 and putting in terms for her, right? Like, okay, so how much money do you really want down? Like to bottom number, right? Be like, okay, cool. I can give you 20-30K just to move. So you want to go with your family. And then we talk terms over the next 5 years. I pay you $300 a month. And then at that 5th year, I go ahead and get that whole shebang to you and see if they go for it. If they go, cool. You don't have to come in all cash. You come in with 20, you fix it up, right? And then you rent it. And so, I mean, just give an example. Maybe rents are what, 2,400. So you go ahead and
you don't have to rent it out. You can wholesale it after you fix it up. You still got to make more money.
True that. Well, I'm in the game for the cash flow. So I would probably fix and rent it and rent as much as I could, as high as I could. And then kick them back cash and still get my
full. You are and how hungry you are.
Yeah. So, but you got a good point though, Gio, that you can actually wholesale it.
You can. I mean, you got to make a little bit less than market value, but you're still going to make 30 or 40 grand on it.
So what do? You're going to fix it up and then put it on the market?
You can, or try to wholesale it.
Is that what you mean by
you don't have to market it to put it, if you don't have to put it to market value, you just wholesale it and you still make 30 to 40 grand on it.
So you go through a contract with her, put some money down, 20K, 5K, whatever it is, have a contract with her, and then you sell it right after you get it in contract and fix it up?
Yeah, after you fix it up, you can wholesale it. Find a wholesale buyer if you want to go the quick way.
Yep. And just don't even deal with the property. Just
That's some gems right there. That's novation because it's in your name, so you got it no matter what.
That's not novation.
I know it's not novation, but I'm saying it's like it, but it's more safe because you're not doing it under their name. Now it's in your name and you own it, but it's under their lease option or whatever you got going on with them.
Yeah, novation is like you would go in and you say, hey, look, let's do this. I'll come in with the cash to fix it. You put it on the market and we split the profit. That's novation.
Or novation is you ask them what their price is, what they want. They want $450 for it, but you go in and put $5,000 and get $500. You get the price after that. You give them their full asking price because they know they can't get $450 for it. It's only worth $430 at the condition it is or whatever.
Right,
so
but if you
help
fix
them,
it, right. If you fix it, then now you can put it back on the market for $450. You split the profit between you and the seller.
Yeah, and that's all I'm saying. What you said is kind of like that.
Yeah,
but different.
Right, Josh?
I just heard something. It's a pretty cool little way to talk about novation to a seller.
Mhm.
And it's like, don't even use the word novation, because
No.
most people don't know what a novation is, and it's just going to confuse them. So I would come in and I would be like, okay, what we can do is we can give you our grand concierge service, or whatever that word is. You know what I'm saying? To where
Yeah.
we can come in and we'll bring our crew in. We will fix the place up. We'll bring it up to, to what we can get, so we can get the market price for it to get the top ARV.
Right.
We'll bring in, we'll list it. We'll have a realtor take care of all that. We'll get all the on market. We'll do the whole thing for you. We take care of it all for you. And in the end, when it sells, then, you get your asking price. And if it sells a little over for what we're making, we can cut you on some of that too, or, the rest would be ours.
Right.
But, I wouldn't even like talk to it as like, well, we're going to, we could give you a novation agreement. Like,
Yeah,
presented
most
as
people
like,
don't
we're
know.
going to give you this full on service. We are going to come in, we're going to take care of everything. And in the end, you're going to get your most money, and we're actually going to make more money than we would too in our other business model.
Right.
But we're also coming in, we're doing all the work. We got our crews ready. We got all the materials. We got, we're going to make this place sweet for you.
You need a contract for that, like a piece of paper that shows them with a happy face picture and
course.
stuff, like a nice thing that says, hey, this is what we do. We list it, we mark it, we give you the grand finale, put it up on the market, and this is all the things you do. And if it goes over, don't say we kind of split it, just have a percentage of like, okay, so it goes over ARV, you get 2.5% of that. How about that? You get your full asking price, plus you get a bonus. And we're the best at what we do.
Yeah. What do you
A little
mean you
piece of
can't
paper.
talk to people, Zach? What are you talking about,
I'm
dude?
telling you, I'm
Right?
practicing.
Fired up.
But I didn't hit all
Oh,
the
sell
4
it
pillars
then.
because I get so sick of asking people about their shitty fucking houses. Sorry, I don't want to hear about Gio's not even a real seller. I don't want to hear about his fake crappy house. I just want to get an
Yeah.
appointment. I want to go in there and I want to tell you about what I see with your property, and then send you an invoice saying, hey, I can fix it up. And I got the grand finale paperwork if you want to partner on it. I like that too.
Yeah,
See,
Zach,
that's
it's the
perfect.
same thing though. It's the same. It's just that you're asking all that ahead of time. I mean, and then when you go in there, you're just kind of confirming, like, oh yeah, the HVAC is crap. Oh
I
yeah,
heard you
this
say
is
that,
blah,
and I
blah,
agree
blah.
with you 100%.
I'm just saying, because you don't want to leave, you don't want to leave money on the table, and you don't want to waste your time.
Yeah,
right?
you don't want
I know.
them feeling good that I'm going to give them 450 and make the
Right.
appointment just because I'm going to give them 450 and I get there and it's worth 300 and now we're
Exactly.
both
You'd be
pissed.
like,
Here's another little nugget too. So say like just from that first phone call, your VA lets you know, or Zach, in your case, because you got VAs or whatever, so they let you know, these 3 things are need fixed. So that off the rip, and let's say they're larger things. So you don't want to go into that and be like, okay, well, this needs fixed, this needs fixed, this needs fixed, this needs fixed, this needs fixed. So I'm going to need a reduction. Mention like 1 or 2 of those things, those heavy things, and be like, okay, well, this is going to cost me some money there. So I'm going to need a reduction there. It's going to have to come down. And then when you go out and you inspect it or whatever, then bring up like, okay, those other ones, because then we're going to give you more little leverage points instead of having just one lever where you're like, well, I need a reduction because of these 6 things. They're going to be like, oh, okay, well, you get this much. But if you go in and you pick it apart a little bit at a time, I think like that's a little like tip that'll help you give like more leverage to negotiate.
yeah, that's good, Josh.
Yeah,
Yeah,
because
like the HVAC and the roof is probably the most expensive stuff right off the bat. Yeah, I guess that makes
I
sense. Yeah,
think
that makes sense.
It's
I
just
think you
something that
have them
I
tell you how
heard that
much it
thought was
costs.
pretty good.
Also, sorry.
Yeah, because the way you approach it, Zach, is that they're gonna expect 450.
No, you guys are right. No, I feel that 100%.
Okay.
I need to ask a couple
so
more
you put
questions,
yourself in a
ask
foot to
them what they
begin with.
think about the price, and then go there.
And that's why always, because don't forget, you're worth money too. So why are
Well,
you
see,
gonna
that's
waste your
where,
time going to look at a house if it's not worth the money that you want to pay for it?
Yeah.
yeah, you can get like, say, Zach, you can have like your VA or whatever do like a first like little negotiation. But then when you go out there, the expert, because you're going to go out there and you're with a fine tooth comb, you're going to be start picking stuff out. And those are things that are going to add up. And the seller's going to see those things too, because you're going to be showing it to them.
Yeah, if you go over there, you say this and that is wrong. He said, well, you said you're gonna give me 450.
Zach, I think
Well,
you're onto something there with your business model. I like it.
I haven't told a lot of people about it. I just share with you guys. I did it once, and the guy agreed 100%, but he had a co-executor, and she wanted to put it on market. I talked him to 100K. He said okay, and then I had another buddy actually was gonna loan me the money to buy it, but it was only my first 2 weeks into doing this, and I just didn't feel comfortable with it. And I live out in the country, so I asked somebody about comp, and they go, "It's just how you feel." I'm like, well, like it's true though. No, it really is though, because
maybe
people
out there
here,
though.
yeah,
Yeah.
I mean, it's not 100%.
Honestly, a place is worth as much as someone will pay.
That's it. And that's what they meant by it. And I know like my area, I know like just different. I live close to Seattle, and Seattle people are different than me. That's all there is to it. Like,
yeah.
And that's okay, Zach. Listen, you got a whole crew here. You got me, you got my number. And we're friends on Facebook, so you can always contact me on Facebook if you need any help with anything, or if you want me to close for you, if you just need me to answer a couple questions. I am available.
oh, I got big plans with you guys. I'm just starting my VA system this week. They got the wrong list on accident. They've been calling. I sent a thing to Carlos earlier, and then my VA was talking about this guy. He wanted like 150K, and she's already talked him down to 50K for this property. It was built in 2010 in Illinois. Yeah, dude, I looked at it and it just had like shingles blown off the front of it. He says it's paid off, but he said he's like a wholesaler and wants to like get into investing and stuff. But I'm asking more. She was on the call today, but I forgot that it was multifamily. So I don't know. It's a whole nother system. It's hard to talk them in to come into a group like this, right? It's not. They work for somebody else that I hired, right? It's
only a multifamily if it's more than 4.
Yeah. I get that. I don't know. It's just,
What
I'm new to it, man. I just got these people, and my time is more, I don't know. I can cold call, and I was cold calling, and I was feeling good about it after a couple weeks of it, but I really got sick of talking to people about their crappy houses. Like I just didn't have it in me anymore. I'm a master carpenter, so I've already been through the apprenticeship. I feel like I did that for a little bit. I liked it. Obviously, I'm not very good at it, but the more appointments I go on with these VAs and this acquisition manager app, they're going to send me appointments constantly. I'll be talking to people, and just after a little bit, it won't take me long to know what I'm doing now that I've had this little bit of
Zach,
practice.
you don't want them, send them to me. I'll give you a percentage.
Gio, I'm going to talk to Christina. She's the one that sent me this lead about this lady, and then just send it to you, and you can work a deal with her. I don't need nothing out of it. I just want to see deals happening, because the more people I'm around that are doing deals, the easier it is for me to get something. I'm not in it for the change right now. I'm just kind of in it to figure it all out. So here within the next couple months, I'll be like knowing what to do, and
You'll be a beast.
I'll do my own thing. Yeah, I won't have to worry about it. Yeah, and we're all going to work together, because I'm in another group. So I have you guys and a whole nother group of just people across the nation. It's really cool, but I just don't have the time to sit here and run comps for some place in Chicago, Illinois, and like work and talk to them all day long when I'm trying to buy. I have an investor paying for all this stuff for me, right? He wants 30 Burr properties here in my area. I have to get him 30 Burr properties. I need 10 Burr properties before I can jump in and start 100% on another course. Right now, I've already started one course. I have to finish that one and win it. But I'm here with you guys learning all these exit strategy and meeting the top people to send stuff to.
Yeah, because if I can give you a piece of advice, stay away from Burr property until you get more experience.
Yeah.
I hear you, gals.
It's not for the newbies.
When I'm talking about Burr property, I'm fixing it up, and I'm putting $100,000 in equity myself with a crew.
Oh, okay. You got people. Okay.
Well,
you're fun to do it. More power.
Yeah, but you're a contractor, right?
Yeah, I have my license, so the bank can pay me directly to fix properties.
Okay, so you already know. That's just not for somebody who like doesn't know the cost of materials, how to fix stuff. Yeah,
that's why I joke about it. No, I'm not a beginner at that. I'm just a beginner at getting the properties, and that's the easy part so far. It seems like you just have to be in the right groups.
Yeah.
Well, you're in the right group now.
Yep. You're in the powerhouse.
That's it.
You guys are
power and knock it out.
Gotta go to a meeting with Dustin. I'll talk to you guys later.
Okay.
Right,
hey, Josh.
Yeah.
question. I want to know about the system because Carlos said that we can get the same system that you guys are using.
Yeah, I will ask Justin about it while I'm on the phone with him.
Okay, I'll see.
Okay.
Well, okay, cool. Thanks. Bye, Josh.
Well, what's up? Okay,
No,
bye.
I just
All right,
goodbye.
much love.
Much love, guys.
All right, are we done?
Yeah, I'm
Yeah.
done, guys. Thank you.
Yeah, we're done.
Thank you.
Anybody
All right,
else? Jonah, Daniel, you guys didn't say anything.
I know, we don't know what we got. I don't know how many people we have left.
It's too loud where I am right now.
Daniel's like chilling out. Okay.
Yeah, I can't tell where he's at, New York or what else?
Yeah.
LA?
So just so you guys know, my plan.
I'm in Miami.
Miami?
Nice, Miami.
Yeah.
All right.
So
All
I
right.
don't know. It's too loud right now, but I'm a boat captain on the weekends. I don't know if you can see Miami back there.
Yeah, that's cool. Are you on a
Yeah.
boat, dude?
Yeah, I'm a boat captain.
Wow. Okay, hey.
So
We should be jamming with
yeah,
you.
it's, I have the Miami life, you know. I'm a realtor in the day during every single day, and I'm a boat captain on the weekends.
Nice.
All right, guys,
All
I'm
right,
gonna
well,
jump
go do
off.
your thing. Have a good weekend.
Yeah, guys.
Guys,
Nice
All
talking
right,
to
much
you.
later.
love to everybody. Enjoy your weekend.
All right. Yo, Jonah, are you there? Are you out?
Miss Williams, I'm gonna go too, but I plan on sending leads that are more sub twos to you guys as I get them. I just started out the VA system, so
Okay, cool.
that's my plan. That's my plan, and I keep joining in. I'm gonna try to learn as much as I can, but I gotta practice my script because I'm already in a course that I have to finish. I don't
Yeah,
not
go
finish
ahead and
something
knock
before
that
I
out
jump to the
first.
next one. Right? Shiny
Exactly.
object. You guys are my shiny object right now, and
Right.
I gotta focus on what I started. So I
Exactly.
hate being like that, but that's what type of guy I am. You know,
No,
I started
you
something,
gotta
I gotta
follow
finish it.
through. You gotta follow through on what you'd
The
start.
10
So.
burrs is going to be nothing. And then I got a lot of stuff going on. I really appreciate you guys. And I'm super
All right.
excited about all the, just a whole other network outside of my other networks, you know?
Yeah.
And you guys are awesome. Like, I love the team morale. It's just perfect.
Nice. All right. Well, you have a good weekend.
You too. Thank you.
All right. Bye, guys.
See ya. Bye.